many ways by which we can take our options trades to avoid losing out. And in this video, we want to look at certain mistakes that traders make, which sometimes make us, lose money on our trades or get disappointed at the way the trades go. For those who are new here, my name is Flavia, and those who are already, part of this channel, I do not take you for granted. I appreciate all of you. Right, so let's go down to discussing the topic of the day. And today, as I said, we are looking at common mistakes that traders make and how we can avoid them. And mistake number one, in our trades as options traders, we need to look very closely at the Greeks. Options Greeks are certain players that contribute to the success or otherwise of our trades. And what are the Greeks? We have about 6 of them, and then I will go straight to mentioning them because today it looks like our topic, what we are going to be discussing, is really involving. And the number one thing we look at is the delta. And what is delta in our trades? Delta measures the sensitivity of our options price to changes in the price of the underlying assets. All right. So when you are taking your trade, you need to pay particular attention to how the delta is before you proceed to take your trade. And then number two, we are also looking at gamma. Gamma also measures the rate at which delta changes with respect to the changes in price of the underlying assets. Okay? And then the third one we look at is data, and data measures the sensitivity of price to the person, the price to the person of time. Here we usually refer to it as time decay. Remember, when we are trading options is not like buying stock and you are holding, so that if you are holding it for a long time, maybe price will return and then you make your profit. Every option has an expiry date, and as time passes, data rises. And when data rises, that is what causes our option to lose value. All right. So when we are trading, we should be very, very particular about some of these players and then see how we can maneuver our way to taking good trades. And then the fourth one is Vega. And Vega measures the sensitivity of our option price to the volatility of the asset in question. All right. There are two more that is Rio and Charm, but most of the time these are the 4 that really we pay particular attention when it comes to taking our options trades. All right, so I would encourage you to go and then learn more about these factors that we refer to as the Greeks, the options Greeks. Get to understand them very well because the numbers matter a lot in the success of your trade. All right, and so I would want us to go to the second mistake that traders make, and that is over leveraging. Most of the time we trade with a certain percentage of our account which is too high. Okay, sometimes we feel we know how a stock price will move, so we want to make a killing, so we go in with a large percentage of our account, and if it doesn't work the way we expect, what happens? We lose out. So we should be careful of over leveraging. Let's always start with monies that we can afford to lose. All right, and then number 3, one of the mistakes also that is usually causes us to lose out on our trades is when we ignore the volatility of the assets that we are trading. All right? Volatility matters a lot. If you enter into a trade, and let's take, for instance, you've entered into an options trade, and let's say Monday you started a trade on Monday, and then your option expires the next Friday. So you have 1 week. Remember, the stock market works from Monday to Friday. So if you have said that, okay, you are choosing your date, and that is from Monday to Friday, and you have entered into this trade, but the particular asset you are trading doesn't have any volatility, it doesn't move at all. All right. So remember, we spoke about data, and data, as time passes, it rises. Okay. There's time decay on your trade, and then it loses its value. You understand? The value of your option decreases as the time approaches expiry. All right. So we should be trading assets that there is volatility in them, that that at least there's movement. Sometimes you enter into a trade and then the trade is sitting there, time is passing and it is looking at you. No. So we should know what asset to trade and then measure how we want to exit, to be able to be profitable. All right. And then the fourth mistake that traders make is holding options for too long. Right. Sometimes you enter into a trade and you are so particular. You know very well, you think that this price should get to a certain level. And once it gets to that level, you are going to be profitable. You've given yourself targets. But at the end of the day, like I said, it may not have moved to your favor. Okay? So you are there grinding and time is also passing. Right. You can cut down your losses. If you are holding too long to a trade that is already, not profitable, and from all indications, you're already running the red, get out. Okay? And the second thing is that if you enter into a trade and then your Friday is the expiry, but then, Tuesday you've seen good profit. But looking at your indicators, you think that this thing can still move. Market may reverse. Anything can happen, like I've always said. Anything can happen. News can come up. Management can change. Anything can happen. A major investor could withdraw or could sell, large sum of his or her shares in the company, which may even affect the price of the asset in question. So let's not stay too long. Once we see profit, let's take our profits. All right? Don't wait till expiry. It may not play well for us. Right. So number 5 is not having a trading plan. As for trading plan, it will always come up in our discussion, because with options, the thing is, because options work with time, then we should be as strategic as possible. Because when it is not profitable, you either come out or you lose out. You either cut down on your losses or you lose out. Because as time is getting closer, your option loses value. All right? So, having a trading plan as to when do I want to enter? When must I exit? So when must I exit, you would look at what profit, what percentage, and I will always say that for me, I look at perfecting percentages. When you learn how to perfect your options percentages, then anytime you are in trade and then you have your target met, you exit. Because sometimes you'll be there and looking at where this thing has moved, and I've made this much, but there's so much gap, the thing has to come down. No, get out. Okay, so if you have a plan that, okay, I want to make, in this trade, I want to make 30%. You hit your 30%. Get out. Okay, get out. And then you are looking at it that, okay, I've entered this contract with $200. If the price, my contract price, if it runs down to about 180, I'm out. So you set your stop loss over there. Once it gets there, you exit. All right. So these are some of the things that can keep us grinding and grinding with one trade when you could have saved $1 million. All right. And then number 6 mistake that we all make, is we not putting a stop loss. As for stop loss, it is difficult because sometimes you put stop loss and then you are in the trade, it just comes to cut you out, and then it continues in the same direction that you were anticipating. All right. So sometimes it's difficult for traders to apply stop loss, but it's equally very saving on your investments to discipline yourself and then put a stop loss, because stop loss is your portfolio saver. Okay, if you put stop loss and it doesn't get there, fine, we are moving, because you are not controlling the market. Okay, you are not in charge of the market, so you will not know what will happen when you turn. Protect yourself by putting a stop loss, so that in case something unexpected happens, you are protected. All right. So these are the 6 mistakes that I thought I should bring to bear on this channel, so that we can be very careful, we can be very, strategic, to taking certain steps that will help us to be profitable on the stock market. I have always said that when you are very careful, as for the stock market, it's been there before we were born. You will be there trading, and then you will go and the stock market will be there. It is not going anywhere. So let us be patient. Let us be disciplined. Let us apply all the risk management tools, and then ensure that we protect our capital in our accounts, and then we can trade all the time. Stock market is not going anywhere. Once we have our monies in our accounts, we can always trade. When we make our percentage, let's run home with it. Let's apply all these 6, steps, in addition to what we are already doing, in addition to our technical analysis, our fundamental analysis, and then I am very sure that we can always run home with our profits. All right. So if you have found any, ideas that you can apply in your trades, you have found any good in this content, you found value in this content, please, those who are new, don't forget to subscribe, and don't forget to like the video. For those who are regular channel members, I will encourage you to like the video. Until we meet on the next video, once again, I wish you the blessings of God. Stay trading and stay happy. Bye.